everyone, myself Vaibhav. In today's trading session, we are seeing heavy losses in the equity segment. If we consider the three key equity indices for US, the Dow Jones Industrial Average, S&P 500, and the Nasdaq, all three are seeing losses of around 1.5 percentage point to 2%. For the Dow, the losses have been more compared to the tech-dominant Nasdaq and the broader index of S&P 500, and that's mainly because the financial sector has taken more of an beating. If we consider the data docket for the day, there were not many market moving releases, but even in absence of these market moving data, we have sharp moves in today's session, and that's mainly being driven by the rising worries that the current economic boom, which we are observing in the advanced economies, is not likely to last beyond few quarters, and that's because we have seen that in recent past, in recent last few weeks, the COVID cases have gone up, and that's happening because of the rise in spread of the Delta variant, which is a lot more infectious. Though we don't really have seen significant jump in the hospitalization, and the current vaccines are expected to protect to a great extent, but those who are still unvaccinated and even those who have been vaccinated are at some risk, but of course, those who are vaccinated at lower risk, but mild symptoms can be observed there. And those who are not vaccinated, they of course will have to get vaccinated to reduce the risk of severe symptoms, and the always possibility of fatality is there, and that has sent the US Treasury yields tumbling lower. We have this situation where we are observing the boom in the US economy, but still at the same time, the 7-year Treasury yields have dipped below the 1 percentage point, and the 10-year Treasury yields are also inching there. At the moment, the 10-year Treasury yield stand close to 1.2, and it is also quite low compared to its recent rate, where it was mostly closer to 1.5. But now, as more and more people are getting concerned regarding the economic prospects, and by that I mean a sustained recovery, and as a result of that, the appetite for bonds have increased, and that has pushed the dollar USD on the back foot. Now let's see what the technicals are telling us, if there are any trading opportunities which might come our way if we want to take the advantage of the current sharp moves. So in today's session, we will consider the outlook for the Dow Jones Industrial Average first, and afterwards we will also see what's happening in the currency space, where the instrument of choice is Euro USD. Let's start with the Dow Jones Industrial Average technical outlook. This is the daily time frame chart, and from this chart you can see that this is a kind of move which doesn't really happen too often. We have these sharp moves only on couple of days in last couple of months, and today is one of that day where we have this sharp decline starting close to the 34,600 for the day. The US index of Dow has tumbled close to 34,000, and it looks likely it's on its way to this prior swing low. The price area of around 33,000 is likely to be expected in coming days, if not today itself. So we will be looking for the technical opportunities, and we will see how this newfound bearishness can be exploited for our advantage. So if we have to keep in mind some key levels while trading in the though, I think this central pivot point is going to be crucial. For last many weeks, the underlying momentum has been bearish, and the central pivot point has been acting as a crucial support. Last time around, when the Dow went on to decline from the levels close to 35,000 to 34,200. It did found support on the lower side and rebounded to trade closer to 35,000 for a couple of days. And after failing to cross and hold above this first resistance, we are seeing this selling pressure emerge. And now it looks likely that at least from short to medium term, the outlook has changed and it will be better for us to keep looking for shorting opportunity and not try to buy the dough at the current juncture. We will see how we can use these technical developments where we have this breakout below the central pivot point, and that opens up the possibility of dough tumbling toward this first support of business pivot point series, which is there around 33,400. So I think the advantage can be taken here as long as we don't really see any kind of sharp reversal from the current levels. And as the day has progressed, I don't really think it is prudent to get involved for a new trade at the time being, for the time being, or you can say at the moment. But the underlying momentum is bearish, and if any trade has to be taken, it has to be on the short sell side. The only thing is what are the optimum levels, and for that we will be relying on the three key SMAs which are converging closer to this 34,700 level. And given the sharp decline, I am expecting these two SMAs, the 50 and 100 SMA, to cross below the 200 SMA very soon. And that will mean that we will have more factors to be confident about our bearish stance in the Dow, and of course the area of interest is going to be the convergence zone of these three key SMAs. And as I said, the price area of 34,700 is going to be crucial, but that's almost 2 percentage point away from the current level, and that makes it very difficult for us to anticipate, or you can say expect, the Dow to again climb back towards this resistance zone and then consolidate, and afterward we can take a trade. So that is going to be a tough ask, and what I think we can do is, if we don't really want to wait that long, at least allow the price action to catch up with the 50 SMA. And by that I mean we will have to wait for the Dow to consolidate on the lower side, and in the meantime, the 50 SMA is likely to catch up, and in the scenario where we can get the entry anywhere close to 34,400 or 34,500, in that scenario, we can keep the stop loss just beyond these 200 SMA, and with that, our risk will be curtailed to around 1 percentage point, and on the lower side, we can target the price zone of 33,500 or even below that, bringing us the risk reward ratio of at least 1 is to 2, and evidently more than that. Now, let's shift our attention to the currency segment where we will consider the technical outlook for Euro USD. This is the daily time frame chart, and here for last couple of days, the Euro USD has spent the time in a very narrow range. In today's session, though, we are seeing sharp moves. First, it went on to decline towards 1.176, and from there on, it turned the corner, and right now it is trading somewhere close to 1.182. So that's a turnaround of more than 50 pips in a single day, and that kind of move changes the near term outlook. So I don't really think at the current levels it will be good to go for a new short sell trade. Rather than that, we can look for some scalping kind of opportunities where we can try to buy as close as possible to the day's low and sell it on the higher side. But given the magnitude of rise in last couple of hours, I'm not really in favor of shorting the Euro USD closer to the 1.182. Rather than that, we can keep in mind that it has found support closer to the first support of this month pivot point series. And also, if we look at the regression curve, it has also started to bend on the upside. It is now pointing northward simply because the price action has gone sideways, and it has made almost equal kind of lows closer to this price band of 1.177. And given that formation, we have this possibility of a Euro USD moving towards, at the minimum, towards this prior swing high. And that means we can target the buy trade anywhere close to 1.18. And on the higher side, we can expect the Euro USD to move towards 1.185 or even above that, at least towards 1.19 in course of time. So if we have to take the trade in today's session, we can utilize this immediate price formation where we have seen these strong support coming in play around 1.77, but that means we will have to take the risk of around 30 to 40 pips, and only in that scenario you will have the higher probability of ending the trade with a profit. We can't really take any trade closer to these current price level with a sharp stop loss. The stop loss is going to be close to immediate swing low, and that means we will mostly have to sit on the sidelines for today's session. But we can observe the price action, and if in today's session we see the Euro USD breaking above 200 SMA, then that will be a critical marker for a turnaround in Euro USD's bearish momentum, and in that kind of scenario, we can continue to look for a buy trade and keep the target price closer to this immediate swing high or even beyond that, while keeping the stop loss closer to this low of around 1.77. And the risk reward ratio is of course going to be dependent on where you get the entry. If the entry is going to be closer to 1.18, then the risk reward ratio is going to be favorable enough. I think the risk reward ratio is going to be at least of 1 is to 2. And that's my take looking at the current price formation for the Euro USD. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Do check out the Lucoscopy Analytics page for further coverage of the market developments. You can also start using our G4X platform to trade in a very convenient manner. We are also available on the Facebook. You can follow us there. Thank you all for joining in. Do subscribe to the Lucoscopy webinar channel. See you next time. Till then, goodbye.